Representing the National Information Technology Development Agency, NITDA, his keynote, please join me with a warm round of applause as I call to the microphone Barrister Abdullahi.
Thank you so much. I think before I go right into it, as rightly said by the facilitator, my name is Abdullahi Abubakar Aliyu. I work with the National Information Technology Development Agency, which is a name that people struggle to pronounce. Now, before I proceed, let me try this. By show of hands, please, who in the room knows NITDA? That's the National Information Technology Development Agency. Okay, I can see 1, 2, 3, 4, 5. I think it's very important to state before I continue who NITDA is and what NITDA does, right? But please permit me to first appreciate Curacel for inviting NITDA for this precious program. The National Information Technology Development Agency is a government organization established under the NITDA Act of 2007. We are under the Federal Ministry of Communications, Innovations, and Digital Economy. And our mandate is simply to develop and regulate the IT sector in the country. I know everybody knows who CBN is, right? We're not at the same level. We know what CBN does is to regulate the financial sector. So similarly, the IT sector, the responsibility falls on NITDA. This includes digital transformation, cybersecurity, AI, and other emerging technologies. With this, I think I've been able to provide a brief synopsis on what NITDA does, on who NITDA is. The next thing is I'm representing my DG, Malam Kashifu Inuwa Abdullahi, CCIE, who is unavoidably absent. He's out of the country. He sends his regards to all of you here and appreciate you for joining us today, this morning. I will be reading his speech, which I've prepared and is here in my. So permit me please to read the keynote speech. All right, I'll start speaking on behalf of the DG NITDA. Distinguished guests, leaders, and practitioners from across Africa's financial services ecosystem, ladies and gentlemen, it is a pleasure to join you at AI Compass 2026, a timely platform bringing together the leaders shaping the future of banking, insurance, payments, fintech, and embedded finance across Africa. I commend Curacel for creating this platform at a particularly important moment. The question before the financial services industry is no longer whether artificial intelligence will transform the sector. It already is. The more important questions are, how quickly will we move from experimentation to scale? How do we ensure that AI creates measurable economic value? And how do we build trust, security, accountability, and inclusion necessary for AI-powered financial services to succeed? These questions are particularly important for Nigeria. Our financial services ecosystem has already demonstrated that technology can fundamentally reshape how people participate in the economy. Digital payments, mobile financial services, fintech innovation, and embedded finance have expanded access, reduced transaction frictions, and created entirely new business models. In the first half of 2024 alone, Nigeria processed 22.4 billion electronic payment transactions, worth roughly around 1.56 quadrillion. That scale is itself a policy fact. It tells you that whatever we get right or wrong about AI governance in payment will be felt by millions of Nigerians almost immediately. The Central Bank of Nigeria's Payment Vision System, Vision 2028, launched in Abuja this June, captures this trajectory. Its vision is anchored on 6 principles: interoperability, security, inclusion, innovation, trust, and collaboration. With the ambition of creating a secure, inclusive, innovative, and globally connected payment ecosystem targeting 95% financial inclusion and fraud losses below 1% of transaction value by 2028. I believe these principles are equally relevant to the next phase of artificial intelligence in financial services. Because the future of digital finance will not simply be about making financial services more digital, it will be about making them more intelligent. Ladies and gentlemen, artificial intelligence is already changing how financial institutions understand customers, manage risk, detect fraud, assess credit, personalize services, automate operations, and make decisions. Across Nigeria's banks, insurers, payment companies, and fintechs, AI is already being applied to onboarding, personalized engagement, fraud detection, credit risk assessment, portfolio management, and forecasting. The opportunity is quite enormous. AI can make financial services more intelligent by enabling institutions to understand patterns and make better predictions. It can make them more efficient by automating repetitive and highly data-intensive processes. It can make them more secure by detecting anomalies, fraud, and cyber threats at speed and scale. And it can make them more inclusive by enabling institutions to design products and interfaces that better serve customers who have historically been underserved. This is particularly significant for Africa. We have a young population, a rapidly expanding digital economy, a vibrant fintech ecosystem, and significant gaps that technology can help address. AI gives us the opportunity to build financial systems that are not simply more sophisticated, but more responsive to the realities of our people and businesses. But there is an important distinction we must make. The opportunity is not simply to deploy more AI. The opportunity is to deploy the right AI in the right places with the right safeguards. Ladies and gentlemen, this is where I believe the conversation must now move from AI experimentation to AI at scale. According to PwC's report, latest AI performance research shows that 82% of organizations across Africa are already running AI pilots, a figure now roughly on par with global AI leaders. The problem is not that we are failing to experiment. The problem is what happens after the pilot. African organizations are investing a median of about 2% of revenue in AI, against 5% among global leaders. And only about a third of executives believe their current investment is even sufficient. At the same time, the same research found that 64% of African workers are already using AI in their day-to-day roles, ahead of the leadership layer that is still building the confidence to act on what AI tells them. The workforce, in other words, is ahead of the institution. For financial institutions, this distinction is critical. It is relatively easy to demonstrate that an AI model can identify fraudulent transactions, generate customer responses, or improve a forecasting process. The harder question is whether that solution can be deployed safely across millions of customers, integrated into legacy systems, governed appropriately, monitored continuously, and trusted by both the institution and its customers. The next phase of AI in financial services must therefore be defined not by the number of pilots we launch, but by the value we successfully scale. And scaling requires foundation. It requires trusted data. It requires more secure and resilient infrastructure. It requires skilled people. It requires clear governance. It requires cybersecurity and operational resilience. And above all, it requires trust. Ladies and gentlemen, financial services have always managed risk. That is financial services core competence. But I want to be direct that AI changes the nature, speed, and scale of the risk we are managing. And that deserves more honesty in rooms like this than it usually receives. An AI credit model can encode bias at a scale no single loan officer ever could. Customers increasingly cannot explain, and sometimes neither can the institution, why an automated system rejected their loan or their claim. Your AI systems now sit on top of enormous volumes of sensitive financial and personal data, which makes them a high-value target for attack. Models drift as fraud patterns and customer behavior change, quietly becoming less accurate than the day they were validated. Nigeria's own exposure to deep fakes and synthetic identity fraud means AI can make impersonations and social engineering more sophisticated than anything our fraud prevention systems were originally built to catch. And as more institutions build on the same small set of AI and cloud platforms, we are creating a new kind of concentration risk. The last point is not hypothetical. Just this week, Moody's published a warning that deserves attention from every institution in this room, that the financial sector's growing reliance on narrow set of foundation model and cloud providers is creating what is called a systemic dependency, where an outage or a pricing decision at one major provider could ripple across an entire sector at once. As AI adoption deepens, expect regulators everywhere, including here, to pay closer attention to operational resilience and third-party concentration in AI stack. This is why AI governance in financial services cannot be treated simply as a technology issue. It is a question of consumer protection, data governance, cybersecurity, fairness, accountability, transparency, and financial stability, all at once. From NITDA's perspective, the financial sector already has sophisticated frameworks for managing risk. AI governance should complement those frameworks rather than create a parallel universe of regulation. Our approach at NITDA is straightforward. We should regulate the risk associated with AI, not regulate innovation out of existence. At the same time, innovation cannot be allowed to outrun accountability. The higher the potential impact of an AI system on a person's life, the greater the expectation for appropriate safeguards, assurance, human oversight, and accountability. This is the foundation of a risk-based approach to AI governance. I've spoken before about the framework that guides how NITDA regulates emerging technology, and I want to restate it here because I believe it applies with particular force to financial services. We call it the Regulatory Intelligence Framework, and it rests on 3 pillars: awareness, intelligence, and dynamism. As a regulator, we must be aware of the environment we are governing, intelligent in how we interpret the data and evidence in front of us, and dynamic enough to adapt as the technology evolves. Because in AI, the technology moves faster than any conventional rule-making cycle. It combines rule-based regulation, which gives clarity and consistency, with a non-rule-based approach that allows use cases and best practices to develop guardrails as they emerge. Because in a field moving this fast, the flexibility is often more effective than trying to write every rule in advance. Nigeria has made a deliberate decision to approach artificial intelligence not merely as a technology to be adopted, but as a strategic capability to be developed and governed responsibly. This vision is anchored in our National Artificial Intelligence Strategy. At NITDA, we're translating the national ambition into a practical governance architecture, a national AI governance framework that manages risk across the full life cycle of an AI system, from risk identification and classification to responsible development and deployment, impact assessment, assurance, procurement, data governance, compliance, and enforcement. The objective is not to create uncertainty for innovators. It is the opposite. Good governance creates certainty. Businesses should know what is expected of them. Innovators should understand the boundaries within which they can operate. Consumers should know that they have protections. And regulators should have the tools necessary to respond proportionately as technologies evolve. For financial services, this matters because AI systems increasingly operate at the intersection of technology, data, and regulated financial activity. And in my experience, what financial institutions actually want is not less regulation, it is predictable regulation. I want to be very clear about something because it matters for the credibility of everything else I've said this morning. NITDA's approach does not replace sector-specific regulation. The Central Bank of Nigeria remains central to the regulation of and supervision of banking and payment services. NICOM has its mandates over insurance. The Security and Exchange Commission has responsibility for the capital markets. The Nigerian Data Protection Commission has responsibility for data protection. NITDA contributes to the broader digital technology standards and AI governance layer that cut across all of this. The future, therefore, requires regulatory coordination rather than regulatory competition. AI does not respect institutional boundaries. A single financial product may involve a bank, a fintech, a cloud provider, a payment processor, an AI model provider, and multiple data ecosystem at once. Our governance response must be capable of addressing these interconnected systems while preserving the mandates of the institutions responsible for each part of the ecosystem. This is why CBN's own emphasis on collaboration alongside security, innovation, inclusion, and trust in Payment System Vision 2028 is so important. The complexity of the digital economy requires shared responsibility, and that is exactly the model NITDA wants to build with every regulator in this room. Data is the foundation of AI-powered finance. Financial institutions hold some of the richest and most sensitive data set in our economy. Transaction histories, financial profiles, identity, behavioral patterns, and these are increasing the raw inputs of AI systems. But data is not simply fuel for AI. Data is also a responsibility. Nigeria's Data Protection Act provides an important foundation for responsible data governance, privacy, and accountability. And as we develop AI systems, we must ensure that the data collected is being collected and processed and used lawfully. We must also confront data quality honestly. Poor quality data produce poor quality AI, and biased data produces biased outcomes. If an AI model systematically disadvantages particular communities because of the underlying data reflects historical exclusion, we risk automating yesterday's inequalities into tomorrow's financial systems. Our objective must be to build AI systems that expand access rather than reproduces exclusion. Ladies and gentlemen, in Africa's financial services ecosystem, we have an opportunity to shape what comes next. I encourage financial institutions to move beyond experimentation and focus on AI use cases that create measurable value. I encourage technology companies to build solutions that are secure, explainable, and responsive to African realities. I encourage regulators to continue developing coordinated, proportionate, and innovation-friendly approaches to AI governance. And I encourage all of us to treat trust not as an obstacle to innovation, but as an enabler of it. Because ultimately, the future of digital financial services will not be determined by who adopts AI first. It will be determined by who can scale AI responsibly, securely, and inclusively. Nigeria is committed to being part of that future. We want to see a financial ecosystem that is technologically advanced but also trusted, innovative but responsible, efficient but inclusive, and globally competitive while remaining responsive to our local realities. The future of financial services will be intelligent. Our task is to ensure that it is also trusted. Thank you for your kind attention. God bless the Federal Republic of Nigeria.